Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, February the 4th, the year 2020. Let's talk trading. Start at the end. I know that might sound funny, but when you want to go somewhere, you already know what the end is. That's your destination. So you need to know where you're going so now you know the direction to head in. So it's kind of the same with trading. So, for example, if you have $1,000 account and your goal is to say double it in a year, then you start at the end. Okay, 2,000. So 6 months from now, how much do you need? Or 11 months from now, or 10 months. You plan it out and you have these mile markers or waypoints along the way to see how you're doing. And I'll show you a few of those things today because it's pretty interesting trading day. And of course, when you're starting at the end, you also know how much you're willing to lose on a particular trade. And sometimes maybe on a particular account, say maybe you have $10,000, but you're just getting started, so you only put $1,000 in the account. That way, you say, if I lose this $1,000, then just maybe, either this method or this market just isn't my cup of tea, my forte. So that way you set up that risk in the beginning. And of course, boys and girls, fellow traders, you really need to remember that these videos are for educational purposes only, and your results may differ from mine. And that trading's risky, you can lose all your money. So, that being said, if you're seeking trading advice, investment advice, financial advice, get your advice from an accredited financial professional. That way, if you take their advice and lose your money, you know you got your advice from an accredited financial professional. Okay, disclaimer is done. Looking at the weekly chart here, you can see we still have a few gaps that haven't filled. But I want you to notice something. Remember last week that gap was like right there? Well, look what happened. It filled. But you see here, there's still another weekly gap. Now, it may or may not fill, but these are the types of trades where, see, I know where the end is, and so that's what I'm reaching for. And so, if it doesn't make it, then I have a stop loss in place. But if it does make it, I see a nice big reward. So there you have it. And let's move on here, looking at the yearly chart. Now, once again, here's that yearly open. It price closed below it yesterday, then it started out to the bottom, crossed it. So if you just took that one little trade here, simple horizontal line trade, the yearly open, this line's not moving for the entire year, you'd be up 78 pips. Once again, these simple trades that sometimes pay off handsomely. Um, Also, notice, no, we crossed that day of the year, the opening line for the year. We crossed across the high of yesterday, which was the opening range for the week. And we also crossed right through here, high for the opening day of the year. So you had 1, 2, 3 opportunities there to get long. Now, you notice these are only like 7 pips apart. So maybe, just maybe, you added on at each one of these. And of course, you had your stop loss placed accordingly. That way, if you stacked on the trades, and I think I mentioned stacking a little bit yesterday, you can see here, instead of having one trade, you could have 3 trades and being up an average of 70 pips. But once again, educational purposes only, your results may differ from mine. We did not even have an opportunity to get back into that weekly buy zone. Price just moved on up. Now, yesterday we crossed above that inside bar month, which was 5 months ago. Now we're inside the inside bar of 7 weeks ago right here. So look the short at 17, long at 67. But remember, educational purposes only. Let's see, for some reason we're looking, we have the pound New Zealand there. But 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 pairs over 100 pips in range. Once again, shooting out of the previous day's high. I mean, these trades pretty much can happen every day. So it's just a matter of whether or not you want to take it. You know, price is always going to exit a wick zone unless the wick zone is huge like this one. But see, even here, price exited the wick zone, price exited the wick zone. So that's one of the reasons, like the trade, look at the wicks to tell you all you need to know when it comes to price, what price is doing. Here, we just put in the monthly highest open this hour. Of course, you know, the pivot's going to be somewhere here. We'll see that in a minute. Here's the D1 daily highest open for the month. Daily lowest open here, H1. Monthly, daily lowest open, monthly H1 lowest open. And of course, you can use these figures to analyze other pairs. I just like to trade the dollar yen. We took out the pivot. We're above the weekly open. So after taking out the pivot, we got long triggers here and they paid off handsomely. Red rats, get ready. Plenty of range here. Notice yesterday, I believe we took out that weekly and the monthly pivot that I mentioned on the first day of the month. So we're approaching weekly R2 and daily R4 for the pivot traders. So chances are you're going to look for a reversal from this area. Pivot, we're looking at the weekly here, dollar yen, almost going to hit that pivot. We're just what, 7 pips away. See if we take that pivot out on the weekly. On the daily, we've got a pivot at 91 we need to take out from this year. So you see we took out this pivot today, right here. Took us 1, 2, 3, 4, 5, 6, 7. And of course, some pivots don't get taken out, but I mean, there was a whole year here. Only one in 2018 hasn't been taken out. So it's not 100%, but I still like the statistics. They seem to be in my favor. Using the pivot as a bias and as a target, and looking for opportunities to take out missed pivots. And as I mentioned now on the price action chart, not even really looking at the 1 ball or 3 ball or 2 balls much, but price open between 60 and 70. Price is not going to stay between 60 and 70. A short paid off, and then the longs paid off. And as you can see here, once you start to get this, a couple of closes here in the same area, price is not going to stay here. It's going to leave. Why? Because it's only 10 pips. But the average range is much higher. Wick zone in and out as usual. Just cutting across these horizontal lines. Once again, if you want, you can stack on trades. Adjust your stop loss accordingly. Here, we had a short trigger, but on a green day like today, you can see it's already moved down. So here, I'd be hesitant, but here, going back, didn't make a new high. You see right here, these tops of candles. You see a wick zone here. Price just didn't do it, so take your profit. Might only be a couple of pips, but that's 2 pips profit. You can see on the range we've probably got about 4 or 5 pips here. Now its price is starting to come back down. On the ATRs, we're in the weekly ATR zone. We shot through the daily. Nice place to look for reversals right here. 121 range, average 124, so we're close to that average. And we'll just see how it plays out. Starting to look for reversals. We've got the beast again here. Lower low, switching back to dollar yen, higher high on the week, lower low on the week. So what does that mean? We've got an outside bar. Looking back at the daily, you can see once again crossing, and there's that moving average. I just put that in for the squigglies. I try to help out squiggly line traders as best I can. So, fellow traders, some of this stuff, I know it's repetitive, but that's good trading. You repeat something. Because if you think about it, the only thing that you can really do wrong is basically not sticking to your plan, not checking fundamentals. Like maybe you upgraded your trading platform and you didn't check the lot size. So make sure you check your lot size. The first time I had the MT4 on my phone, it came up with a full lot as opposed to a mini lot. And so I put on a trade and then I, put the phone back in the pocket. And then I bring the phone out, I'm up like $100. And it was like, what? And I looked, it's like, holy cow. So I closed that trade out real quick because it was the wrong position size. So, there's a lot of things, you can forget. In fact, I was reading something because I think I've told you a few times I've been shooting pool a few times a week. No, I don't play in tournaments. I don't want to get into that mindset. I just like to shoot pool. But they were talking about easy shots. He goes, an easy shot is easy to make and easy to miss. And it was funny because last night I missed an easy shot. Why? Because I didn't get down like I normally do. It's like, oh, this is easy. I don't have to do everything out wrong. Missed the easy shot. And some of the players I play against, you miss a shot, it's game over. So, it's good to play against people like that. So they make you pay for your mistakes, and the market will make you pay in money for your mistakes. So it's just something to keep in mind when you're trading. Just make sure, maybe when you first start out, just check everything. Is the position size proper? My stop loss that's coming in place. Just those things. Just don't think you can skip those things because sooner or later it's going to bite you. And there was something I wanted to show you guys here on this. Once again, you see how it just took out all these highs. Price just took out all the highs. Now there's lows to be taken out. And you can see here there's only about 9 pips between the high and the low. So something's got to give sooner or later. But I think I wanted to show something else on this chart. Let's turn off the I think if we turn off the high and we turn off the low and we just show the open, I don't remember if that was working or not. You can see here we've got one open that didn't, that the low wasn't lower than. So that open hasn't been crisscrossed. But we'll put the highs and lows back on because that's really where we want to see the price. So in fact, let's even take that open off. and we'll just work with the highs and the lows. But fellow traders, just remember, it's not what you trade, it's how you trade it.